Hey everyone, you ever get that feeling, that sense of deja vu? Well, in the world of investing, it's actually pretty common. And right now, we're seeing this powerful echo from the 1970s, a story about stocks that everyone thought were invincible right before they crashed and burned. And you know what? It looks like it might be happening all over again. So that brings us to the big question, the one we're really digging into today. Is what we're seeing in the market right now just a dangerous repeat of the past? I mean, are we staring down the barrel of a bubble that's ready to pop, just like it did 50 years ago? The similarities are, well, they're kind of shocking. And if you're invested at all, you need to understand what's going on. Okay, so let's set the stage. In one corner, we've got the Nifty 50 from back in the 70s. Think about big, iconic names, Polaroid, Coca-Cola, the kind of stocks your grandparents would say you just buy and never ever sell. And in the other corner, today's champs, the Magnificent Seven. These are the tech giants that feel absolutely unstoppable. So yeah, totally different decades, different companies, but the storyline, it's almost identical. Just a handful of stocks are running the whole show. All right, let's jump in our time machine and head back to the early 1970s. There was this idea that took over Wall Street. It was the belief that if you just bought the best, highest quality companies, you literally couldn't lose. They were seen as completely foolproof. And this created what they called the era of the one decision stock. And this quote really just nails the mindset at the time. The biggest banks, the major institutions, they were all singing the same tune. They were basically saying, hey, these companies are so amazing, they're going to grow so fast that it doesn't even matter what price you pay for them. Think about that. They thought future growth would make any price look cheap. The very idea of selling? It wasn't even part of the conversation. And this kind of thinking, well, it led to some absolutely insane prices. To give you some perspective, the average stock back then was trading at, say, 19 times its annual profit. But look at this. Polaroid was trading at almost 95 times its earnings. McDonald's was at 86. People were just so convinced that these companies owned the future that they basically decided that normal math didn't apply anymore. They just tossed the rulebook out the window. But you know how it goes. Beautiful theories have a nasty habit of getting punched in the face by reality. And that's exactly what happened. Starting in '73, a whole series of disasters hit all at once. It was like a perfect storm. You had the OPEC oil embargo, which sent inflation through the roof. Then you had the whole Watergate crisis, Nixon resigning. People's confidence was just shattered. And the results? A nasty 2-year bear market that sliced the Dow almost in half. The party was officially over. Yeah, this quote says it all. Taken out and shot one by one. It was just brutal. And guess which stocks got hit the hardest? Yep, the ones that everyone thought were perfect. Polaroid, that stock trading at 95 times earnings, it plummeted 91%. Avon dropped 86%. It turns out that one decision to buy was a catastrophe, precisely because no one ever thought about the decision to sell. Okay, so let's hit the fast forward button and come back to our time, 50 years later. And what do you know? A pattern that looks eerily similar starts to take shape. A brand new group of invincible companies shows up. This time, we're calling them the Magnificent Seven, and they start to completely take over the market. And the news story driving it all? The incredible promise of AI. And this chart, wow, it just shows you exactly how dominant these guys became. I mean, think about this. By early 2025, just 7 companies accounted for a third of the value of the entire S&P 500. That's a level of concentration that's even crazier than what they saw with the Nifty 50. The fate of the entire stock market was pretty much riding on the performance of just these 7 companies. Okay, but this is where the comparison gets a little more interesting, a little more complicated. Now, the price tags on these stocks, their PE ratios were definitely up there, just like the Nifty 50. But there was one huge difference. The Magnificent Seven were actually delivering the goods. I mean, they were posting just jaw-dropping earnings growth, averaging 34% a year. So you can make a pretty strong case that, hey, maybe these high prices were justified. But there was a big risk lurking just beneath the surface. And here it is. This was the big flashing red light. Let me break it down. The free cash flow yield is basically the cash profit a company spits out relative to its stock price. For the Mag 7, that was only 2.6%. Now, at the exact same time, you could buy a super safe government bond, basically zero risk, and get a 4.57% return. So wait a minute, why on earth would you take on all the risk of owning a stock to get a lower return than you could get from a risk-free bond? It just didn't make sense. That gap was a massive warning sign. So you've got this market that's stretched super thin, totally dependent on a few stocks with this weird valuation gap. It was like a tinderbox waiting for a spark. And then the spark arrived. Mid-2025, Congress passes this huge piece of tax legislation. It gets the nickname, the One Big Beautiful Bill Act, or OBBBA for short, and it completely changed everything. So you're probably wondering, how could one law have such a big impact? Well, it was actually pretty simple. Think of it in 3 steps. First, the law created these new, permanent tax breaks for companies that make big investments in things like factories and equipment. Step 2, who does that help the most? Not the big tech companies, but the old-school industrial, manufacturing, and smaller businesses. And step 3, the result. Money started pouring out of the big tech stocks and into all these other sectors that were suddenly getting a huge boost. It triggered a massive rotation of capital. And it wasn't just about corporate taxes. This law also had a little something for everyday people. It was designed to put more money right back into consumers' pockets. And the number they were projecting was just huge. An extra $150 billion in tax refunds, all slated to land in people's bank accounts in 2026. That is a serious shot of adrenaline for the broader economy. So you put it all together. You've got these big incentives for businesses and a ton of cash for consumers. It was the perfect recipe for a major shakeup in the market. And as 2026 got underway, the whole narrative shifted. Suddenly, nobody was talking about the Magnificent Seven anymore. The big story was the Great Rotation. All these forgotten, left-for-dead parts of the market were suddenly roaring back to life. And the proof is right here in the numbers. I mean, the results were just instant and incredibly dramatic. Just look at this chart. A little ways into 2026, the Magnificent Seven, the former kings of the market, were actually down for the year. Meanwhile, the rest of the market was taking off. And the small cap stocks, the ones everyone had ignored for years, they were suddenly out in front, up over 5.5%. This wasn't a theory anymore. The rotation was happening, and the old laggards were the new leaders. So there's actually a name for this kind of environment. It's called a rotational bull market. And all that really means is that the bull market is still going, but the leadership is changing hands. Instead of everything depending on just a few giant companies, the strength is spreading out. The market is getting its power from a much broader and, frankly, a much healthier group of stocks. So when we put this all together, what are the big lessons from this whole story? What does this echo from history teach us? Well, first and foremost, price always matters. It doesn't matter how great a company is, if you pay a crazy price for it, you can still lose a lot of money. The Nifty 50 proved that. Second, nothing lasts forever. The kings of the market today are rarely the kings tomorrow. And finally, never ever underestimate how quickly a big policy change from the government can completely flip the script on the entire market. You know, this whole story, from the Nifty 50 to the Magnificent Seven, it's just a classic reminder that the market never stands still. It's always changing, always evolving. What worked yesterday probably isn't what's going to work tomorrow. So as this big rotation keeps playing out, it really leaves us with the one question that every single investor needs to be asking themselves right now. Are you ready for whatever happens next?